Good morning, traders. It's 8:03 a.m. Chicago time on Monday, the 22nd of March, 2021. This is episode number 1959. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's dive right in, folks, to look at what we've got for today. We start off with the convergent trading pre-market summary sheet. Market posture overnight is neutral to slightly risk on, very slightly. The S&P is up 6 points, 0.15%. The Nasdaq's relatively strong, trading up 94 and a quarter points currently, or 0.73. The Nasdaq's above Friday's range. The S&P is inside of Friday's range, so the Nasdaq's relatively strong this morning. The leader is the Nasdaq. The laggard today is silver. Silver trading at 25.67, down 65 cents or 2.47%. Quite volatile. Gold also down. It's trading at 1731.50 in the April contract. Gold's down $10.20 or 0.6%. The cable's off. The Euro stocks are off. The Dow Jones futures are off as well this morning, down 27 points, which isn't very much. It's a little over a rotation. Crude oil, May crude is trading at 61.41, down 3 cents. So overall, just a mixed bag, neutral-ish in terms of what we're coming into. So far this morning, the S&P has traded 205,000 contracts, has had 26 points of range. The overnight inventory is only slightly long by just 13.2%. The profile overall is balanced. It's got multiple distributions, but really it's just balancing out. And that's where we stand this morning. So that's the long and the short of it. The Fed parade takes place today. We've got existing home sales at 10 Eastern, 10 a.m. Eastern, and then after that at 10:30 we have Fed's Barkins. At 1 we have Fed's Daily. 1:30 we have Fed's Quarrels, and this evening at 7:15 we have Fed's Bowman. So that's where we stand. Let's move on to real quick to what was expected on Friday. Let's bring that into view here. On Friday, the primary scenario is a push higher. Expecting it to push into the 10 area, the overnight point of control, and then was looking for an impulse down, consolidation, and then for it to go and test, as I talked about the day before on Thursday's Trader Bite, that we're very likely to test this 88 area, expecting it to push through the 88. Remember, this is an MC volume point of control, so it's an acceptance area, so it's likely to get slushy in there. It's likely to push through, and it's likely to chop around in there. It is acceptance, major acceptance in this area. So the expectation is not that it would bounce off of the 88, but it's likely to push through, consolidate, and turn back up. The secondary scenario is a push lower immediately, test the low, then break higher and get into the 25 area and consolidate there. In either case, we would see a lower high, lower low on Friday's range, continuing the one-time framing down on the daily, with the weekly one-time framing up. So we'll look at that a little bit more closely today as we dig in. Here's the action as it happened. We have an opening swing of 39.05.50. to 38.9650. We consolidate for a little bit, but we end up pushing. We end up getting an impulse immediately down through the 88 area. We consolidate around the 88. We expect this, and then we get a small extension to 75, and then it starts to get stronger, consolidates back into the prior day's range, into the opening swing, and then we break higher and we form this really big kind of zipper zone on Friday afternoon. Very choppy trade. We end up with two key distributions here, and we end up finishing right at the point of control, basically. So overall, we ended up breaking up above 3,900, but not holding on to those prices. And then on Friday, we closed at 38.96 even. So what we did is we tested lower, came back in. We could not break above this the 25 area right here, this low volume node from Thursday. We had two distributions on Thursday. We stayed below it, and then held sideways, and then we stayed weak going into Friday's close. Even though we broke the range, the IB to the upside, and we had range extension up, it actually finished relatively weak. Okay, um, so that's where that stands. Now let's carry. By the way, Friday ends the expiration and gets rid of that whole inconvenience, so to speak. It's the only real negative thing about trading futures, in my opinion. Naturally they're not suitable for all investors, but to me, futures are just a cleaner trade. Friday, with the delta was just negative throughout. It pushed higher on this impulse up, which was basically the second largest impulse for the day, and it was positive. As it sat sideways here, there was a selling aggressor in here, and we ended up with a delta that's going down and down and down. We have a consolidation in the aggressors on the sell side. It looks to me like somebody's unloading, somebody's liquidating along there. So we ended up with a delta that's relatively negative, and uh, the action kind of falling back into the middle. Here's what's happened since. So this is Friday's drop back into the IB. And then since then, we gapped down. We tested lower, tested back up into Friday's close, higher low. We have an impulse up, consolidate, and we are really working hard. It looks to me like the S&P is working very hard to regain some ground or to push through the 3,900 and maintain above, which it successfully did after several attempts. Right here is when Europe opens. It pushes lower immediately, comes back, consolidates, and breaks to the upside. We still remain inside of Friday's range. We still remain below that single print at 2,900, below the 2,500 area. It's still looking weak to me, even though it is making higher lows as it tests. So we'll see this morning if we regain the territory, if the shorts win back the fight to bring the action back below 3,900. Not likely. I expect this to be a relatively slow day. We're opening inside of Friday's action. We're above the point of control. The point of control on Friday was at 3,900 and a quarter, right on the century figure, right below us. And so we're going to just pay careful attention to what it is likely to do from here in terms of whether it moves lower or not at the open. It is unclear as we sit here. It's really unclear what what it's likely to do. Again, the overnight inventory is long by 13%. That's it. So it's fairly balanced. We have a market that's again inside of Friday's range. It's regained a little bit of the upper distribution, a little bit that chop area, the zigzag area that we spent the whole Friday afternoon at, which is also kind of a neutral position. So it really is today is about a game of waiting to see who fires the first shot, and the way the first shot looks is an impulse, a real push, an aggressive push by a higher time frame up or down, and that's what we're looking for today. There's not an edge to either side, in my opinion. Here's what we did last week. We end up holding the one time framing up on the weekly. We put in higher lows, but once we took out the 73.50, we put in lower highs. And again, we are back at this 38.88 area, which has a lot of volume in it. We tested it. We held above, but it's a relatively weak finish on Friday. And to me, this looks like it is not done to the downside. It's not showing any signs yet, and I may be wrong. It may prove me wrong today, but it's not showing any signs yet that it's ready to lift. Okay, so that's where that stands. On your overall, I mean, there's really not much more to read into this. Okay. So let's move on to what's expected for today. But I want to make sure everybody knows that I will be taking time off from Wednesday this week through the weekend. I will be gone. I will be there to do the levels for convergent traders and checking in with them, but I will not be doing a trader bite. So starting on Wednesday morning, I will be gone. There will not be a trader bite on Wednesday. There will not be a trader bite on Thursday, and there will not be a trader bite on Friday. And if all goes well, I'll be back in the seat on Monday morning to catch up and figure out where this market is going next. So just be aware that I will not be here Wednesday, Thursday, Friday. Okay. Let's take a look at what's expected for today. I don't have much more to add, so let's jump right into that. Just setting up the chart here. Come on. All right. So, what are we looking for? So, overall, oh yeah, you might get a ton of volatility Wednesday, Thursday, Friday. I've got a long track record of when I leave, we get these massive moves. This morning, given the way the market is postured, given the location of where we are, the expectation is open auction in range, response back to 3,900, test below the 3,900 into the overnight point of control, consolidate at an attempt to squeeze. I'm expecting it to attempt to squeeze higher. Why am I leaning to the high side? It's because the almighty NASDAQ is trending up and has already taken out Friday's high and has moved back to the MC point of control in the 12,965 area or so. That's basically the overnight high. I'm expecting it to catch up, consolidate, and find its way up higher on the primary scenario. So I expect a test lower to fail, bringing in confident buyers. Buyers step in, push to test Friday's high, which was 1950, poke through Friday's high and threaten the one-time framing down, threaten shorts, and consolidate into that the 39.20. We do have a big single print at 39.29.50. Secondary, consolidate at the open test the overnight high at 39.11, push through to 18, fail to hold, impulse down, consolidate again at the overnight point of control and the 3900, and then start to make its way to the lower end of the range to finish basically on an inside day, a resting day, which wouldn't surprise me today. It's Monday. Um, and so this is what I'm expecting today. The secondary scenario is one where it's slim pickings, and you need to be very, very attentive to being emotionally involved with your trades. It's best to just wait for things to play out. My personal approach to this, to these kinds of days where we're opening in range and it looks like we're on top of some key areas and we're sideways. My approach is to just chill, just wait and look for a side to push because there's a point where a decision is made and then the higher time frame comes in and steps in to execute its perceived plan for the day or the week or the month or whatever. um, and I'm just going to wait for that. So I'm gauging the impulse, which side gets the impulse off and starts to drive the market. That's really what I'm waiting for as I'm sitting here. So that's what I'm looking for today. Not expecting to be very active, not expecting an active day. So just take it easy and wait for it to break one way or the other before you commit. Okay. So I'll leave you with that. Again, I'm not here Wednesday, Thursday, Friday. I'll be back on Monday. There will be a trader bite tomorrow morning. Everything's as normal today and tomorrow. And then I'll be gone on Wednesday for a much, much, much needed break. Good luck, and I'll catch you later. Take care.